Hey there, awesome accounting student. Mark Franke here. This is a video for Accounting 100 on Chapter 7, Sales, Accounts Receivable, and Cash Receipts. We're going to be focused on customers in this chapter, and this is specifically customers that buy a product. We're in the business of selling a product, what we call merchandise. Anytime you see the word merchandise, it means a product, tangible personal property. So some of the big merchandising companies, of course, that I'm sure you've all heard of: Walmart, Target, Home Depot, Costco, Amazon. These are all companies that sell a product. Now, the focus of this chapter is going to be selling from a business to another business. In other words, a wholesale transaction. So think about if we were a toy store and we were buying toys from Mattel or Hasbro or other toy companies. Or we are a bike company and we're buying bicycles from the big bike manufacturers like Giant or Trek or some of the other ones, Schwinn. Anyway, so in this case, when we're doing business to business transactions, and have established a relationship with our customer, in this case, we have payment terms. So payment terms means that we are providing our customer the option of paying us at some point in the future. The most common is net 30. Net 30 means that I'll send you the goods, you look them over, and if they're okay, if you accept them, they're the right thing, then send us the money in 30 days. Or send us back the product. And we're going to talk about situations where customers send product back to us. Also, there are out there payment terms that give customers the option of taking a discount if they pay within a certain period of time. So what's in front of you here is 210 net 30, which means a 2% discount if you pay in 10 days. Otherwise, you have to pay me in 30 days. But it could be 110 net 60 or 115 net 45, so you can plug in whatever works best there. So the problem we're going to use today to illustrate how this works is problem 7.4b, which is on page 227 and page 228. And for this, we will be using a journal, and I have provided you with some work papers where you have a journal, page 12, 13, and 14. And then I'll do another video for problem 7.5, which will be taking these transactions, posting them to a general ledger and to an accounts receivable ledger or a customer ledger. So, but this one, we're just going to go through these journal entries. And I've already got this in here just to save time and typing so I can talk about how they work. The first transaction says, on May 1st, sold floral arrangements for $450 to Annie's Flowers. Issued invoice 9312 with terms 210 net 30. So all the information that we have should go in the description. In this case, the customer name is Annie's Flowers. The invoice that we've issued is 9312, and we've given them terms 210 net 30. So the transaction is recorded a debit to accounts receivable and a credit to sales. Accounts receivable is an asset. It's going up. It means that our customers are going to pay us in the future, and we have provided them with the goods. We've shipped the goods, in other words. And credit sales. Sales is the word we use when we're selling a product. In the past, we've dealt with fees income, which is the type of an account that we would use when we're providing a service, but when we're selling a product, we're going to use sales. Then on the 4th, we received a check for $11.76 from Orange County Florist in payment of invoice 9299 of April for $1,200 less the cash discount. So this is a transaction of a customer paying us for something we sold them last month. So they are taking a discount. That's the $24. That's a debit to sales discounts. Sales discounts is a negative revenue account. Negative revenue account because sales is going to be a credit, as all revenue accounts are usually credits, but in this case, it's a negative revenue or a contra revenue account. So we're going to put the $24 discount that they've taken. We're going to debit cash because they actually sent us $11.76, and we'll credit accounts receivable for the total amount that they owe us. So in your book, it shows that this particular customer, which is Orange County Florist, had a beginning balance of $1,200, and that is actually something we'll deal with in problem 7.5, but I'm just so you understand, this is a transaction from a previous month that they're paying for. Transaction C, which was on May the 6th, it says sold merchandise totaling $925 in cash to a new customer. We'll call him just a cash customer. And that transaction is going to be a debit to cash. So in other words, a customer walked into the store, they paid us $925 for flowers or whatever, and it might have been even more than one customer. And we credit sales. So this is to a cash customer. And then on the 7th, one of those customers, whoever they were, came back with some bad flowers, or they didn't want them, or something happened that for $25 of sales, they said, hey, look, I don't want this, or whatever it was. So we issued them a cash refund. So we debit sales returns and allowances and for $25, and we credit cash for $25. So this is when we issue a cash refund to a cash customer. Sales returns and allowances, like sales discounts, is a contra revenue account or a negative revenue account. It's going to always have a debit balance. Transaction E is on May the 8th. Sold floral arrangements for $1,500 to Rosas Flowers and Gifts, invoice 9313, terms 210 net 30. Very similar transaction to the one we had before, different customer, and the invoice number is one more. So these are going to be sequential. In other words, the invoice numbers are going to go up one at a time because that's how companies issue invoices in sequential order. Debit accounts receivable, $1,500, credit sales, $1,500. On May the 10th, we received money from Annie's Flowers for the sale that we made back on, let's see, on the 1st of May for $450. But because we offered them a discount, the terms were 210 net 30, they are going to take that discount of $9, which is 2% of $450. So we debit sales discounts for $9, credit cash $441, and debit cash $441. We got the cash. Cash is going up, and accounts receivable is going down. That's a credit, $450. Keep in mind that whenever a company takes a discount, we have to take the receivable out of accounts receivable at the gross amount. So the original amount was $450 back on May 1st, so we have to take $450 out of accounts receivable. Now we're going to move to page 13 of the General Journal, and the next transaction is transaction G, and I've labeled these with red letters all the way through so we can post and leave a trail, and we'll see that happen when we do 7.5b. So a transaction on the 14th gave Rosa's Flowers an allowance because of withered flowers discovered in one of the floral arrangements on May the 8th, and issued credit memorandum 109 for $200. In other words, our customer Rosa sent back these flowers that were bad flowers and said, hey, I don't want these flowers, they're withered, and so we're issuing them a credit. We call that a credit memo because we're crediting their account in accounts receivable. We debit sales returns and allowances and credit accounts receivable. In this case, it's called an allowance, although the account is the same. Sales returns and allowances is one account that we use for these kinds of things, whether it's a return where the goods physically come back or an allowance where maybe the flowers are dead. There's no sense in us taking them back. They're dead. They're going to go in the trash. So Rosa just throws them in the trash, and we issued a credit memo. Now, oftentimes we'll say to Rosa, hey, take a picture of the flowers and email it to us in this digitally friendly world so we can verify that they were withered. I've done business with companies in the fish business, and when a company says, hey, this fish is bad, they'll take a picture of it and send it. So we do want some verification, although, we have a relationship with Rosa. We probably trust that she's not going to take a discount in a situation where it's not warranted. Transaction H is on the 17th, received payment from Rosa Flowers and gifts for the sale of May 8th, less the allowance given on May the 14th. So now Rosa is paying the invoice. She originally had an invoice of $1,500. We gave her a credit memo for $200 for the withered flowers, which means that she now owes us $1,300, but because we offered her a discount and she's paying within that 10-day period, that's $26, so she sends a check for $1,274. Debit sales discounts $26, debit cash $1,274, and credit accounts receivable for $1,300. That wipes out the receivable at the gross amount. On May the 19th, received a check for $2,900 as payment in full from White Lily Florist for invoice 9279 dated April 20th. Here's one that's similar to the one we had before. This is a customer that had an outstanding balance at the beginning of the month because we're in May, and this invoice was in April. They're not within the discount period, so they're just sending us the total amount. Debit cash $2,900 and credit accounts receivable $2,900. Cash is going up, accounts receivable is going down. Then on the 20th, and actually we have three of these in a row, the 20th, the 24th, and the 26th, we sold product to Grand Party Supply, in this case, for $580. Debit accounts receivable, $580. Credit sales. This is transaction J. Then on the 24th, we had another transaction. This is Miata Floral Designs. Debit accounts receivable, $480. Credit sales, $480. Same transaction, just a different customer and a different invoice number. And then let's go on to page 14. And this is Cancino's Flower Shop. Same transaction. We sold them some potted plants. Debit accounts receivable, $850, and credit sales, $850. So all three of those transactions on the 24th, the 20th, the 24th, and the 26th are all identical, just different customers. Then on the 27th, we accepted a return from Miata Floral Designs, and we issued credit memo $48. It doesn't say that the product was bad, so they probably gave it back to us so we could sell it again. But either way, we're going to debit sales returns and allowances for $48 and credit accounts receivable, $48. Accounts receivable is going down. We issued them a credit, so their balance is going down. Then on the 29th, we received a payment from Grand Party Supply for the sale from May the 20th. They took a discount, so they're paying within the discount period. The original invoice was $580, so they're taking a $12 discount There may be some pennies in there. I've just rounded things to the nearest dollar. That's fine. That's the way I do it. Almost every single thing in this class, other than payroll, I'm fine with rounding things to the nearest dollar. Debit sales discounts, $12. Debit cash, $5.68. And credit accounts receivable, $5.80. And then the last transaction is another sale. This is to White Lily Florist. Debit accounts receivable. This is on the 30th of May. Debit accounts receivable, $1,200. And credit sales for $1,200 for a sale to White Lily Florists. So that's the transactions in this problem. I'll stop the video there, and I'm going to make another video that you can watch that will take it from this point and then post to the subsidiary ledger and the general ledger. So stay tuned for that. Thanks for listening, and I'll see you again soon. Bye-bye.